Before I go over the exact math and show you if, or if not, these ultra-high yielding ETFs have actually been profitable over the last year time frame, I have to be fair and explain that some of these ultra high yielding ETFs, something like CONI, the YMAX coin option income strategy ETF, is actually up quite a bit in the all-time charts, sitting up over 31%, and that's not even including those massive distributions, so it does go to show that maybe some of these ultra-high yielding ETFs do have a place in our portfolio, and I guess that is if you can choose the right one to buy now. First off, if we were to compare Tesla to Tesla, which of course is the YMAX Tesla option income strategy ETF that has a distribution rate up around like 40 or 50%, whatever it is, if we were to look at both their performance over the 1 year time frame, even though TS offers a massive dividend, TSLA Tesla stock, just good old plain Tesla stock, is basically double that of TS. Now this is one of the main things that a lot of critics say about some of these ultra high yielding cover call style ETFs, is that if you want exposure to the underlying so badly like Tesla for example, then why not just buy shares of Tesla now? The obvious reason being is that Tesla of course does not pay dividends, and a lot of dividend income focused investors try to build out a portfolio that has a consistent, at least consistent bucket of assets that paid them dividends on a monthly or quarterly basis. But the critics against some of these YMAX ETFs do have a good point, considering that if an investor was to just put $11,000 into Tesla stock and just got paid no dividends over the last year and just let the Tesla stock ride, they would be up quite substantially over that of Tesla now. Although we don't have enough data to really see coin versus CONI, since CONI is pretty new, a very similar thing is most likely going to happen here. So CONI basically tracks or references the Coinbase stock, and as we can see, of the last 6 months, coin which pays no dividend at all is up 96%, or CONI that offers a massive dividend to investors and also has actually grown in ETF price is only up 63%. So once again we have another case of if you were to have just bought the underlying reference stock instead of buying the super high dividend yielding YMAX ETF, in this case could you have made more money throughout the exact same time frame? Now, funny enough, if you look back over the last 6 months, there was actually times where CONI was actually up in the green, where Coinbase was down in the red, or at least pretty close. But then at times where Coinbase decide to really rally, cannot keep up because of that cover call overlay. So what is this mean for these ultra high yielding ETFs? Are they worth it? Are they a scam? Should you or should you not buy them? Now, at least for me personally, I think it's fun to buy some shares, just a very small amount of shares of some of these different ultra high yielding ETFs, to sort of play around with them, see how they trade, and to of course receive massive dividends on a monthly basis, or at least that's what we've had so far. But I've actually seen online different investors build out their entire portfolio with different ETFs like this. And although some of these ETFs even with the decay are beating the overall market, and a lot of the stocks even within my dividend growth portfolio, I still do think that generally speaking a lot of these different ETFs are pretty risky to hold on to, and for the most part because with this strategy there is oftentimes a lot of ETF price decay long term, but by no means do I think that if you are more of an income dividend focused investor buying into something like Coney or TS or any of these ultra high yielding ETFs, is it maybe a bad idea to boost your overall dividend portfolio's dividend income on ongoing basis, but even with that the dividends are normally pretty inconsistent because once again the strategy it plays here. That's why for me personally, if I'm looking for something that offers a north of say 8% starting dividend yield and most likely is not going to decay like crazy, I personally rather buy someone like GQ, the JP Morgan Nasdaq Equity Premium Income ETF. GQ has a 10% trailing 12-month dividend yield and has pretty consistent dividends at least over the last year or so, but also on the max time frame GQ is basically flat, so even though this uses a cover call strategy, the ETF has not decayed like crazy, at least not as of yet. Now to look a little bit deeper to see if or if not some of these ultra high yielding ETFs are worth binding into, or if they're more or less a scam. Let's first look into the QD, the Global Nation Second 100 Cover Call ETF, which has over an 11.9% trailing 12-month dividend yield now, even with Q's almost 12% trailing 12-month dividend yield. You can see right here that a $10,000 investment into QD would have only turned into $15,600 over a 10.07% time frame. Now that's an average annual total return of 4.57%, which I guess isn't horrible, but you could make more money by investing into the general market or plenty of other investments throughout this time frame. And again, for an investment that's offering such a high dividend yield, you're not necessarily capturing all that much upside because of the price decay, just like some of the other cover call ETFs. Another example of this is TS. A $10,000 investment back in November of 2022 would have returned an investor an average total return of 2.67%, which means an investor would have only made around $290 over 1.1 years invested. Even though TS pays that massive dividend, it might not be as profitable as some investors might think. But lastly, just to be fair, looking at ticker symbol CNY, the YMAX Coinbase ETF, a $10,000 investment back in August of last year would have turned the $10,000 into 15.6 THOOO, or an annualized gain of 143%, or total return of 56%. Now let's be real here. That's a massive return which has been pretty impressive, but of course during the same timeline the underlying coin has performed amazingly.